All right, guys. If you have any questions that you've been studying or anything you want to go over as far as on your trading, let me know. We could go ahead and go over it. Um, this is pretty much your time, guys. You got me here for you guys to help you out and give my input, strategy, psychology as far as what's going on. So don't be afraid to ask questions. I could, I'll definitely answer you and go over anything you guys want to or what have you. And it's very, very casual when we have these meetings here, guys. You could turn on your camera, you could turn them off if you want. You could ask everything via microphone if you have a microphone. Otherwise, just type it in the Discord. Um, yeah, what's got you guys going, or what are you guys thinking about the market going into next week? Trying to think. No worries, dude.
Yo, can you hear me?
Now I can, yes.
One second, let me close my door. I don't know, man. So I don't have anything formal. I haven't really been playing a lot of options lately, but I guess I'm trying to get more into it, right? And then obviously using like the market indexes to try and take those plays. So I screwed up F on Friday, but it seems like SPY wants that big correction, and I don't know how big it's going to be. So in terms of tracking setups versus SPY, how do you typically approach it for like uh, the A plus setups, right? One way or the other, and then the actual strike selection that you're going with.
Cool. So this is something that's really kind of new to me too. So I don't know if you've ever been in like the smash the bid room. So that's where I started getting.
I was thinking about it, and that's what actually got me starting to think about it. And then I heard Nate talking about playing F and all those guys off of the market, and it made sense when I looked at it. And I typically play like the small cap slash mid cap kind of stuff, gap and crap. But these bigger pictures, it feels like you can put on a position a little bit longer, opposed to like just an intraday move.
Yeah. So so that's what man, I really I really hate teaching someone else's strategy. So but just kind of principles of it. So like what I've learned from that end is you don't look at anything less than an hour chart. So and an hour chart, you want to be able to look at the where the lows are to see where the accumulation is to be able to catch those better moves to the upside. And then you're just putting out your profit targets according to the the supply areas on the way up, right? So like here's the previous support, right, where I base this off, resistance. And so
Right,
we
right.
know once we get up there, that's going to be our resistance in order for us to be able to cross.
But
It's
say
already
even that. So that's basically the same thing that I do, literally, like almost to the T on the small mid cap stuff intraday. So I'm
yeah.
looking at like daily resistance, and I'm looking at, all right, what are the potential levels that they're going to support at? Let that actually solidify, and then make some moves off of that. But in regards to the strike selection, that's where I still kind of feel like an idiot at sometimes, right? Like you got your super far out of the money stuff, but it feels like 90% of the time you're not going to do much of anything with that, even though it's interesting. And then the whole volume thing, and then where everybody's at in the market, trying to play that correctly.
Exactly. So that's a little bit hard. So the way that I was taught to be able to do it is so you come to your macro chart and say your target now is off of the 450, right? So I actually did get a little bit of exposure on Friday at 448. I think it got down to that 448 area right here. And so I have two SPX contracts exposed to SPY in that type of way. And someone said in our chat that it was good resistance. And I was like, wait, what? I was all, did it get underneath that? But it actually bounced. They meant support. So we're already at 454. And then I don't have my DAS up. But I believe I got like 45.20s or something like that. Um,
Are
so
you
we're
are you
looking
are you hedging those positions, or are you just playing straight outright?
straight, just straight like that. So because I'm just long calls. So if they expire, the risk is zero on them. So if I come back to the market Monday, say Biden dies, or there's abracadabra variant that comes out Monday, right? And we're
Yeah,
gap down to 445 or something, then it's okay. I only took two contracts, dude. I'm not gonna, you
I
know,
got
cry about it. So if those wind up going to zero, whatever. So Um, but basically, what you the way that I was taught is you want to pick the so if you're trying to swing, right? So say like in this instance, you're trying to get in at these lows, the 450s, um, right? So 450s right here at these lows, and your target is to for us to get back up to all-time highs. Then what you want is for us to be able to get so you'd buy two deltas. So you buy a delta where it's about 50. So a 50 delta where you're able to go ahead and get maybe like 50% of the move. Say it's 4600s, right? So 4600s would be pretty nice. And then once those roll over, then you could roll over into getting the 4700s or what have you then at that point. But so then that gives you that all this money that you already made, and then your targets up here, you could roll it over and just buy those next ones, and then you're already just playing with money that you already got. Or the other way is if it does kind of continue to go for, so you say you buy 4600s, right? And then you buy 4700s as well, so that you would do your full position at that amount. So say your full size position is four contracts. So you buy two contracts at 4600, two contracts at 4700, and then because these are so far out the money and the delta is so low on them, they're going to be cheap as hell, right? So are you going to really cry about it if those go to zero? No, right? But if you do get up here and they start just steamrolling, those are your bonus bucks. Once you go ahead and take profit on these, then you already got these from a really cheap price, and then you're just trucking along still having this. So you're able to combine. So ideally, what you would want is if you come over and you look at let's look at this here. So SPY, right? So say is yeah. So Monday's the 6th. So you come over and you look. What you would try to get. Um, there it is. I took out my 24-inch monitors. I put my 27s in here, and I don't know what to do with myself with these being so big. So you
you.
could get those.
Welcome to the club.
So basically what you'd be buying is like something like a 40, so 40 460 or whatever, right? So it's 28 gamma. It's not very very good, right? So you want something really almost close, like 4850, almost at the money. And then once those get to the 460, you could go ahead and sell those. And what you're trying to get this to add up to like a full dollar, so almost like a the price is right, where you'd roll the wheel or whatever. You're trying to get close to, so you buy a 48 delta, and then say you get like a 33 delta right here, a little bit further out, then that almost makes one here, so that makes like a full dollar move that those both make as each dollar that the underline makes, if that makes
So
sense.
are you actually looking at the delta more than you are at the strike price?
Exactly, because
That's
that's what's going to move, that's what moves your premium, right? So that's what your premium is based off of, the delta. It isn't necessarily the underlying, moving it, what have you. You got to look at the delta on it, and see, intrinsically, if it's going to be able to actually make that move.
yep. I got a lot of studying to do.
I'm here, bro. I'm here anytime you want to ask questions.
Because
I
I'm
know
about to bug the crap out of you, bro.
that's fine, dude.
Yeah,
That's what I'm here
I
for.
did decent on those. I screwed up the the commons on F on Friday, but I actually did decent on the 19 puts. I'm like, man, you know what? You get a lot more action on the price in a shorter amount of time with these options. I probably need to at least, throw a couple more $100 in while I'm learning this stuff and try and figure it out versus just kind of skipping over all this. It feels like a gold mine.
Well, the cool thing of the what we like to play, and I know you're trying to say about the swing thing, but basically what we do, like I know you don't get to come in the room and do it all the time. You're doing your small cap thing, but Mondays, Wednesdays, and Fridays are expirations for SPX and SPY, and so the gamma is more sensitive to the delta on those days because it's zero DTE. So say like you get something like this, right? Say like you get something like this on the SPY on a Friday down here, and you're buying these for maybe like cheap 20 cents probably, right? And
Right.
you're buying something like, just right in the money or right at the money, and it wraps into the close. On the SPX, you don't have to sell your position. It automatic As long as it's in the money, it'll automatically give you the money that you're up on the contracts going into the close. So you don't have to, it's self-settled. You don't have to sell them. So that's what happened to me the other day on the downside when the market tanked. I didn't necessarily forget about my position, but I just didn't really care. I was like, oh, like if it hits, it hits. It doesn't matter. And once it came down, um, I had some SPXs I forgot about, and they self settled for 70K at the end of the day because I didn't think that they were going to go that far down. I have 4600s puts. And then I thought, oh, cool, 48, 47, if they close, cool, nice taco money, whatever. Then we tanked all the way down to 450,
You
closed
got a
down
taco
there.
truck. You didn't get
Yeah,
a taco.
I got taco truck money.
A
There you
taco
go.
truck. Jeez.
So,
Yo,
yeah,
how many contracts was that on?
10. So I had 10. So I think I did like 70% on them or something like that. So I bought them at 950 and they were like $80 or something um, at the close. So that's what happens is that on the zero DTE days, Mondays, Wednesdays, and Fridays, I just look for my setup, right? So like if you have a personal setup that you like already, whether it's like a huge, extension or a 15-minute, whatever, I like these crossovers right here on the pivot. So crossover pivot right here would have been your spot right here. Cool. Here's your downside, and you can sell it. Um, but the gamma is so sensitive on those zero DTEs that you could buy SPX contract for $4 and then it goes to 16 or even 80 or something like like mine did on Friday last Wednesday. So that's the way that I like to play them is on the momentum on Monday, Wednesdays, and Fridays. And if it doesn't set up, it doesn't set up. It's just a setup that I look for on Mondays, Wednesdays, and Fridays because they're so cheap and you can make so much money off of them.
Oh, even if that just happened like twice a month, that's bank.
Exactly. So like, people get, really frustrated, you know, um, I mean, dude, if you come in and that's it's almost like picking up money, like you know what I mean, like it's just
No,
I
no.
I'm not stressed about it. If it's a Monday, Wednesday, or Friday and I see the setup, cool. If it's a Tuesday or Thursday, sometimes it does set up. It's like it's still a no trade though because the gamma isn't as sensitive as it is on the zero DTE.
So on those days, would you decide to sell those credit debit spreads like ADF does?
Oh no, I don't do any of that. So I don't um I'm dumb, dude. I just like to keep things simple. He likes to do, those spreads and stuff. I do. I know on Thursdays and Fridays he likes to do, like the spreads
Yeah, yeah, yeah.
for the
The high
expirations
highs.
for the theta. I do mine naked. I'm like, dude, I'm not gonna because there's only like a certain pocket that you have max profit potential. That's dumb. Why would you like, my risk management is going to go ahead and come off of me looking, actually measuring where my risk is off of, and I have to get out. He could just leave his on, and then if they go against him, they go against him. That's why he has the other side
Right.
of it. So um, I try to keep it as easy as possible, dude. Like especially for the newer people in the room. just long buying stuff. So
Well, I appreciate it, bro.
for sure, brother. Your office looks awesome, dude. And congrats on your
Thanks,
new
man.
house. Your house looks
Appreciate
your house is coming along. It's over. You got like you got like the whole block, it seems like.
it. It's a nice setup, yo. Actually, I one of the neighbor kids came over the other day. I think he thought I was a kid or whatever. He was like, "Oh yeah, we live down here. We're outside playing and stuff." I'm like, "Yeah, I'm definitely a full grown adult, sir."
That's funny. Um,
It's coming along though.
yeah, man, I look forward to, that's one of my soft spots is seeing all the traders with their families and stuff. It's cool to see with your kids and stuff, dude.
They
So,
almost killed me last night trying to get this holiday pictures together.
oh man,
Oh
I could imagine.
oh my god. No, it sounds like one outside. What do you need? Maybe not.
No.
Awesome. All right, I'll let some other people ask questions.
Yeah, do you guys have any questions as far as like the SPX buy setups on Monday, Wednesday, Fridays, guys? Do you guys understand what I mean by that? On why it works like the way that it does?
I'm actually trying to learn. Um, I've been trading like more small caps, trying to learn options, watching videos now. So, like my thing is to kind of follow you for a while, even before I try. So I'm a bit lost in the thing, but I just know the basics. I'm trying to watch stuff online to try to learn something. But my aim is to kind of learn more. So I'm like kind of newbie at this.
Cool, bro. No, welcome. Dude, I went the same way from, trading small caps to trading options. I personally think this is, a lot easier, a lot more stress-free. You're able to manage your risk a little bit better, in my opinion.
Not a little bit better, bro. It's literally baked into the contract. Like
Yeah.
if you're not an idiot, right?
Well, so there's the disclaimers. If you're not an idiot, and if as long as you keep your exposure to a low, right?
Right,
So,
right.
um, it is. So, it makes more sense, to a newer trader. So you don't have to deal with PDT. You don't have to deal with borrows. I mean, the borrows are expensive now, and that's just an added expense on top of everything. Being a brand new trader, dude. So, you don't have to worry with that. You could, open up a cash account, a couple grand, and out to the races. You could trade every day, cash account on this. So especially with the strategy we're just talking about with the, the spy, you just come in. A lot of people have work or school or whatever. Um, this is something that you could wait till the end of the day just to catch a move like this. You know what I mean? What time was this at? Right in power at 1300, and you just get this move to the upside. And I wish
Can you zoom out on that chart? What was that? Was that support from like 3 weeks ago?
this is that triple bottom that's trying to be put in right here.
Yep.
um so Monday, Wednesday, Friday. So on this setup though, guys, you could use any type of setup that you want. All right, so you could use this as a really scalp move type thing, but it's really nice when you get a really awesome trend day either to the upside or downside on Friday, Monday, Wednesday, Friday. And if you're able to, like, even this, like, here's your crossover play on the VWAP, right? Crossover to downside of VWAP, here's your entry right here, and then you're chilling the rest of the day, to the downside till 450, right? And that 450 support because of the round number area, right? So basically what you do is you just if you're playing momentum like that on a 0 DTE on Monday, Wednesday, Friday, you buy the next strike price, the next strike price in the favorable direction that you want it to move. So in this sense, you're right here. We'll just I'm used to talking SPX, but SPY, yeah, 459, right? So I think there's 457 50s or something like that, right? Would be the next one. They're not going to be as liquid, right? So the 458s would probably be better. Um, you could buy the 458s, and then once those are in the money, you're chilling rest of the day. And the reason is because when you look at your um, and I'll back up a little bit here. Um, your delta is how much your premium moves per dollar that the underlying moves. So If the SPY moves $1, then your option contract is going to move 53 cents to the upside if it goes. Now that your gamma is how sensitive your delta is. So the higher your gamma is, the more that this is going to move more violently and more volatilely. And because
Wait. So can you go back to that? So gamma influences delta, but what's based on what? Is it volatility of the price action within a given amount of time?
yes, because it's the expiration date of that day. Because the option makers or the option writers are pricing in that the probability of them not going in the money is likely not going to happen, but then it does happen, right? So you
So
have to
okay,
get
so
that.
gamma is versus the, and this is where I get all thrown off with these Greeks. So gamma is versus the expiration.
Yes,
So
exactly.
probability of this contract going in the money by expiration, they're saying that this one, what is this? The 456 call is 5%.
No, so the delta would be 38%. So that, but then it needs to match it needs to match intrinsically, right? So because it is actually going in the money, they have to get the value of the contract up because it's actually going in the money. They need to be able to have the intrinsic value be there at the in the money price once it gets there. So in order for it to get there, you have to have the delta move a lot more volatilely, and that's what the gamma does. So the gamma is, if the gamma is higher, it's going to influence the delta to move a lot more quickly.
Interesting. So the higher the gamma, the more aggressive the delta moves as the underlying moves.
Exactly. All right.
I'm in math class from like high school right now. My brain is busted. All right, I think I got it. I'm just trying to like, so time versus volatility versus probability.
Exactly.
You sure this is easier than small caps, bro?
It is, dude, because you don't even, I mean, you just, it's almost like driving a car, right? You don't got to know how to tear apart the engine. You just got to know how to drive it. So you
Yeah,
just
like
gotta,
I use Sang Lucci's way of like seeing like how much it might move based off of the other strike prices that are in the money, right? So if I buy something out of the money and I can just do some math to say, okay, if this one is XYZ versus that, if it moves up that amount, it's more likely going to be somewhere in that range. But this feels a little different. So you by selecting the strike, you can use the delta and the gamma to figure out if it's going to be a banger or not.
yeah. And that's why, like, say, like on a zero DTE, like on Amazon, right? You've seen
And what's the
Amazon,
DTE?
uh,
Date till expiration?
exactly. So it's actually that day expiration.
Okay.
So that's why on a Friday, I'm sure you guys have all seen like ADFs, like what is it, what the fuck option or whatever, and someone buys like 80 point out, lotto, and probably for $2 or something like that, and then they turn $200 into $2 grand, or 20 grand or whatever it is because that as that's going up, the gamma is being so sensitive to the delta, and the probability of it not the probability of it going actually in the money on that day was nothing, right? So now the gamma has to go ahead and ramp up the delta in order for it to actually make the intrinsic value of the contract be what it should be when it gets to being at the money or in the money.
And this is all that Black-Scholes model stuff, right?
Yeah, I'm not getting into that. No one is gonna.
I'm
But
not. I read about it, but I'm just trying to like, for the engineer in me is trying to figure out like, okay, how does this stuff work?
yeah,
All right. I think that makes sense. So essentially, if we saw something that was one of those W2F options, right? What would the delta and the gamma look like? Would the delta basically be 0 and the gamma would be like 0, 0, 1, 0, 1? And then all of a sudden it made it in there and it's just like, oh, we gotta essentially, move up to where everything else is at that's in the money.
exactly. So like, so as it's moving, you can see where it's ramping like a lot more aggressively. You can see where the gamma's a lot more bigger than what it is. And so generally, just a rule of thumb, at the money, you should have about a 50 delta at the money. So sometimes what will happen then is whenever you get like a move like that, you'll wind up with like a 60 delta at the money. And so that's when like you're actually that's what's happening.
Gotcha. Sorry for all the slow questions. Just trying to make it make
No, not
sense.
at all, man. I hope everyone else is taking notes, or if you guys have any other clarifying questions on that, because it does, uh, you know, they're called the Greeks, but it is almost speaking Greek to us, dude. So it's a lot. And it is, you just, and again, it's not, you don't have to necessarily get too crazy with knowing all of it. You just got to know how it affects your position. If you understand the way that it affects your position, then you're able to actually you make an educated decision on staying in a position, getting out, or even taking the position to begin with, right? So, but you don't necessarily have to come over and be like, oh, well, this is gonna, the gamma's here and the delta's here, and this isn't gonna be a good trade. You're not doing a multi-leg, iron condor or butterfly or anything like that, where that needs to be like that. You just need to know that on a zero DTE, the gamma is going to be more sensitive, and it's going to ramp your delta from being nothing to really, really huge. And I mean, there's lots of examples I've put in my Twitter if you guys want to go through them too. And if you have a small account, man, it's really nice to, put a $200 or, $400 on an SPX contract, even if it's one, and then it comes out to being $10, dude, that's a nice day. It's a nice week if you can catch one a week, you know what I mean? So,
Yeah, that's pretty sick.
yeah. So, I wish I would have took uh screenshots of the one that happened the other day, but so to answer your question there, Paul, I did I answer it, dude?
Yeah.
Okay, cool. So especially if you're newer, dude, like like I said, if you're say, like, for instance, you are taking this trade that we're talking about, right? Say that the 458 contracts that you bought right here are $400 with your potential. Say you're trading off my lines right here, or what, wherever you're putting your profit target at or whatever. So you're risking $400 right here, and you're saying that um at the money here, you're going to make 50 cents, if not 60 cents per dollar that it moves. So it's, let's see, one, two, three, four. So four, $200. So, so you make like six, or excuse me, what? So $2,000 actually, because it's times 100. So you're risking 400 to make 2,000. Is that a good risk to reward ratio in order for you to take this trade, even just from right here?
Yeah.
Absolutely, dude. So it doesn't matter if your contract expires to zero, you're not going to give a crap. Cool. Um,
How big of an account do you think you need to have just to start small on like the SPY stuff?
dude, you could do it with $500, bro.
$500. That's not bad at all. Like I got a small one that I screw around with, but I don't want to throw a bunch of money in there and then just burn it all up. I've heard the horror stories. So yeah.
No, I mean, but then you're really not risking to zero then, you know what I mean? Because
No,
if you're buying
absolutely.
if you're buying something, say it's $400, and then you're going to zero, cool. You're now you only have 100. So you would have to look at, like, okay, like, I stopped out, cool, I took a $50 loss or whatever,
Yeah,
and then keep on going from there or
makes
whatever.
sense.
But there's a one of my guys that works for me. He did that. He had $100 in the account, and he turned it into 2,000, and then I think he got it to 10,000 recently, and then he needed to pay some bills, so he took some out. So, but it literally, he had wired out at one time, and there's $100 in there, and basically he was teasing, like, the guys that were in the trade factory, and he's like, "Watch, I'll do this with $100." And he was just looking for, waiting for, SPY, which would be, 20, 30, 50 cents, and take those, for 20, 30% every so often. And he would just compound it. And it was, it was funny. Like, he would be so excited about his percentage gains. He'd be like, oh, I made 30%. And it'd be like $15. Yeah. But that's how you do it. That's why everyone gets frustrated. They want to make big gains, but don't realize 15% is 15%. You know what I mean?
Yeah.
Cool. Vishnu, Panda, anything?
Oh man, I'm good.
Good, bro. Here is the setup right here that I like on the SPY that I was taught right here, guys. It's called the 1-2-3. I don't know if you guys have. That's what I call it. They called it something like previous candle high or something like that, and it didn't make sense because you're measuring off this third candle. I'm looking at these three right here, and you're measuring off this third candle, but you're risking off the second candle. It's crazy, dude. So basically what would happen is this candle would close and then you would take the position and you would stop out anything above the high or the body of this candle. So like right here, once it passes the body low of it, that's where you go ahead and get in. And so this you can only do it on the late not only, but it's favorable that you do it nothing less than a 15-minute chart. So you have to do it on a 15-minute, and obviously you measure your profit potential according to the how macro your chart is. So if you're taking on a 15-minute, make sure you're looking at 15-minute profit target. If you're doing it on an hourly, I don't know if I could find one on an hourly. Right here, this is one, and it went down. Right here, this would have been a pretty one. So same thing. Cool. But again, that's someone else's teachings. I won't go too far into it, but just real quick, that's what we're looking at, especially on these SPY and SPXs. Any other questions, guys? Anyone exposed to any crypto right now? Because crypto is getting its freaking ass handed to them right now. I think it's so funny that everyone sold at 6,900, 69,000.
I got out of crypto when all that Dogecoin stuff went off.
Are you still in it?
Nah, bro, that jump it was too stressful, man. Too many, I don't know. It's just weird. And then the fees were nuts when I was doing it. And I had a Binance like before they did the whole US versus European or whatever. Like I had the original Binance account and I couldn't even like it was so hard to get my money out of there. I was just like, screw it. I had to go through like 3 exchanges to get my money out. And then you lose money with each transaction. It was just frustrating. Like,
yeah, dude. Whoever solves that problem with the gas fees and everything being centralized, and which is kind of funny because it's supposed to be decentralized, but whoever solves that problem is going to be a very rich person. Because $300 in gas to freaking sell, $1,000, $2,000, where that's
man, it's ridiculous.
2-3%.
Like you don't people say you don't pay taxes, but you pay it in the exchange fees, and then they're still going to tax you on top of it. So to me, it's just I don't know, too much. I got a bunch of buddies that are like big into Cardano and stuff, but I don't know.
No, and then everything happens when you're sleeping, dude. Like, why would you, expose yourself? You can't even do anything about it when you're sleeping. Like, no, thank you. Like, at least there's an open and shut for my market. But
yeah, my nerves are too bad.
So I have ETH. So I have it from the dip at 2,800. I think it was like right here. Yeah, right here. So it's whatever though. Like it's just if it loses, it loses. Is there anything in particular, Paul, that you're trying to study or you're trying to
No, like now I'm just trying to learn the basics. That's it. I wanna give myself time to learn the basics. That's my goal. Because like I said, yeah, I've just been doing more small caps and options is new, so I'm just trying to learn, follow what you're doing, the basics, give myself time even before I start,
Very
just to
nice,
get
dude.
the information and the know that I understand the basics. Yeah. So that's like my path. So I'm giving myself some few months just to get used to it.
Good, dude. If I could give you, probably two things that are, help the most is that just the rules. So you buy the next, like I was saying, buy the next strike price in the favorable direction that you want the ticker to move. If you're playing intraday momentum, and then um, um, don't buy contracts on Fridays, or don't buy same week contracts on Thursdays and Fridays if you're not comfortable with understanding how the theta affects your contracts. All
Okay.
right, because you wind up taking a position, and then it's going in your favor but not fast enough, and you could be right and wrong on on the same trade. So you're right on direction, but the timing of it is just too slow in order for it to offset the theta decay, and then it's very, very frustrating for you to be know that it's going down in your favor and you're still not making money. How do you
Okay.
use open interest and volume in the setups on intraday stuff, dude? I just use it for liquidity, bro. So if I'm just looking at here, trying to pick where I'm, and then on the swings too. So like, like if I'm looking at, like, I played AFRM and stuff when it was moving up and all that. So I'm looking at, I bought like November monthlies. Usually the monthlies are going to give more liquidity and volume than the weeklies are. So if you're playing a swing, you may want to get just the monthly instead of 2 weeks out, 3 weeks out. You're not going to get, as we're saying, as sensitive gamma. You're not going to make as much money if it does move very favorably and very volatilely in your favor. But at least you're a lot safer if it didn't go your way. You're not going to lose that much money. So I just want to be where I could have the liquidity to be able to get in and out. It's hard to show with the market being closed, but um, if you're playing intraday momentum, then I'm just using the volume and open interest. So if you're playing like the Thursday, Friday rule, like, ADF is, it's kind of funny that I started thinking like uh, critically, like on the other end, okay, that cool. Like if everyone's chasing these, someone has to be selling them. They're trying to make money. And it kind of like at the same time, I was like trying to backtest it, and he came out with it and got all the credit and everything. I was like, oh, and they're like, oh, you're copying. I'm like, no, dude, like there's a reason it gets smacked down at these levels. Like you have to look at it. But anyways, so on intraday momentum, I'm just looking at where I want to play, where everyone else is playing here. So and most of the time it's the whole numbers are at the money. You want to take positions wherever there's the most volume and open interest. If you're playing the Thursday Friday rule, most of the time it's all open. Excuse me, the whole numbers like 460, right? You want to be able to look at the where the biggest open interest is, and that is most likely going to be your resistance. So, and you want to look around here where there's other ones. So right here, there's 5,000 as well. So that's probably going to be resistance 458 too, right? So 458, 460 is so far is where everything is stacked up for this week, um, or at least Monday for the SPY. So this is probably going to be around the top if on Monday. Then,
What do
and
you
then
read off that 472? Yeah, exactly. What do you read off of that?
right here. So that is where everyone that is where the hedges are at. So the bigger hedges, because if you come and you take a look at the do you use uh dude, now I forgot what it's called. Let me see.
Oh, you had that one website, right? Where you could see
Yeah,
the
where the gamma is. Yeah.
yeah, yeah, yeah.
I haven't used it in a while. I forgot. And my setup is like all messed up, so I don't know. But here 470, right? So this is where it makes sense right here, where everyone to the upside is hedged up here, because that's where everyone is technically underwater. Anyone up here, dude, they're screwed. Like they are royally screwed. You up here buying these tops, right? So that is where all the biggest hedges are in order for them, excuse me, the biggest open interest is for them to go ahead and get up to these levels. All right, so
I got you. So
but the thing,
basically,
but
people were buying for new highs. Didn't work out. You got bags up there.
exactly. And so now, but the thing is we're not going to get to this level until these are taken out, right? So right
Right.
here, right here. And so that's what happens is like people start chasing like Tesla, right? Everyone's screaming for Tesla 15, 1300. And that we have to clear out that, we have to clear out those bottom ones first. And we'll, just for the sake of looking at it here, this is not going to be too good because it went down. But if it were to go back up, right, everyone's wanting to get up here. And if you're looking at the chart, so you're going like this, right? So you're looking at this chart and you're like, okay, like we're getting down here into the zone right here, the 1,000, right? And maybe we will go ahead and bounce up the 1,000 going up. Where's the next place up that everyone's gonna stack up at? 1,100, right? So if you come over here and you look at the 1,100s right here, bam, 2,000 contracts sitting right here, and the ones around them aren't even close, right? Not even half of it. So we have to get to 1,100, but then if you come upwards up here towards 1,200, that's where the big open interest is, where everyone is stacked up at right here, right? But so when you're looking at this, the way that I'm interpreting it is like, okay, this is going to be this week's expiration, or this week's probably resistance right here at the 1,100 if we go to the upside, right? And then we will not get to the to the 1,200 the same week, because we have to eat through all these contracts and all this open interest here first, and they're not going to allow that. So then next week we'll probably come up then 1125, maybe 1150 or so, and then finally we'll come up here, and then we need to be able to stack some volume in order to be able to take that out.
That makes sense. It's just it's weird, bro. It's almost like the options are their own, like the strikes are their own
market,
additional resistance. Yeah, but it's like they actually control the price, opposed to the common being, like they're designed for the commons to actually kind of control the options, but the way that people play the options, they're actually driving the commons.
We are. So that's what people come over into the options, side of the world, and you realize that, oh, well, everything is going off of the options contracts here. Because so what happens then, say like we have an incredibly bullish day, say like freaking Elon cured COVID, he's coming out with a freaking I don't know, like badass roadster car or whatever, and we come all the way through here. So what happens on a gamma squeeze? So then everything that is sold in here, right? So everything that is sold, if we get past the 1,200, they start having to hedge up higher. So what do they start doing? They start selling further contracts up, right? So maybe 1,250s, maybe 1,300s up here. And so that is what's controlling the market for it to continue going up. And so if they start,
do you think they're hedging by selling more calls, or wouldn't they want to just hedge with the no, because it's going higher? Buying the puts wouldn't make sense.
Exactly, but then they actually have to go ahead and get they have to buy the actual commons in order to give to the people that they sold.
Because they're going to get filled, so they have to get it, and then that pushes it up.
Exactly. So they're artificially buying. Well, not artificially, but they're creating an artificial demand by having to purchase more of the common stock because of the way that they're positioned. They have to hedge up higher.
That's crazy. It makes so much sense though.
And so when you're able to look at like, okay, like, something is going sideways, and you can start seeing accumulation of where contracts are at. You could kind of tell when the party's over. Like, when we looked at this, the Tesla moving to the upside here, when it broke out of that, 775 or something, 750 right here. Cool. Like, here's all this movement, everything. And then all of a sudden, there's no one else to sell to. There's no one else. There's no one else chasing these contracts up any higher or anything. So what's going to happen? There's going to go down. All the option riders that are in here that have been selling those calls are going to make their money, and it's going to come back down. And
Yep.
that's what. So
So
once
it's not
you,
even necessarily it's not like a traditional short squeeze. I think that's the weirdest part for me to get over is like,
no,
you get a normal short squeeze, people are just short. It's like, I guess you could call it an option squeeze.
exactly. So like it's not like how in small caps where there's a pop probably in pre-market, right at the
Right.
Dow, something like that, and then they go and they back people at a whole number, and then they push it down, and then start accumulating at like a half number, and then everyone is all fat and happy shorting it from that pop or whatever, from that pop right in the morning, and then everyone starts covering, and that's what causes that squeeze. But then what happens though is what's really cool, and that's what happened to AMC, is that AMC was at a price where that did happen, where there was a huge short interest, and the out of money calls were coming into. So the gamma was being delta hedged up even higher. So you had like four different ways that people were creating a demand for the stock, and that's why it went so crazy. Or like
Wait,
GameStop.
say that one more time. What are the four different ways?
So like I think it's three or four. So you had a huge short interest, right? So there's a lot of people that were short in there, so that was already in the squeeze. And
Yep.
then when the move started moving to the upside, the call writers were everyone was chasing the out of money calls, right? So the call writers were going ahead, cool, we'll go ahead and sell them to you, sell them to you, sell them to you. But then because of the short squeeze, it kept on going higher. So then they had to buy those contracts to go ahead and offset delta hedging even higher, creating even more of a demand off of the already short interest that was already in there, making it go even further. So it was like, and that's why, like the whole Robin Hood and whatever happened those couple days,
Yeah, that
where
was
they, yeah. So there's three different ways of demand. So there's normal retail demand that was seeing the stock going up, just buying it, right? There's call writers that are buying it because they're having to delta hedge up higher, and there's people that are short that are buying the stock back because they're getting blown up on their short position. So how do they cover their short position? They have to buy it, and so it just keeps on pushing it even more and more higher.
interesting. Yep. Yep. All makes sense.
So so that when you're thinking critically and you're like thinking of the players in the stock and the way that it is, you got, and like as I say this, quite a bit, is you got to look at, it's like a chessboard. You got to try to look at where all the players are at and how much there is, right? So if you're in a stock and it doesn't have a high short float and it's going to the upside, cool, you're going to get some momentum. But is it going to be like a huge violent momentum that like AMC or GameStop had? Probably not. But if you get something like that, like what was another one that like right after that happened? Um, and it happens on these smaller stocks that you don't think it's going to happen to, and then they just go supernova. Um, Dude, there was one like right after AMC and GameStop that happened to too. I forgot. Had a high short interest, but those are the ones that are the most violent because you got to look at the people that are trapped on the other side, right? You have short bears, whatever, short sellers, bent over, getting their positions taken out, margin called, whatever. And you have these call riders that are getting bent over that are having to sell calls even higher and having to buy the stock, right? And so if you could create a scenario like that, that's what happens. And so now, if you look at it, if you look at the way like the smaller caps and the way the tickers are running, they won't allow that to happen on a smaller cap that that has such a high short interest, because they know that the retail traders now could create the demand to actually, like, it's possible for them to screw them. It won't happen again. They won't allow it to happen again.
Makes
So
sense.
cool. This is a nice convo here tonight, guys. I'm glad we had it. Uh, anything else from that perspective here, guys? Cool, guys. I may hop on a little bit. I'm doing Stockcast tomorrow for on YouTube, and we'll discuss some other things like that. So I also like to see how the futures open. It doesn't necessarily matter all the time, but I just like to see the way that they open, the way that the market is going whenever they open. They open at 4 o'clock my time, so it's like 6 o'clock Eastern. Um, and then we will be here bright and early on Monday. So, and if you have any questions or want a discussion, you could shoot me charts. You could put charts in the chat. We'll go over them. More experienced guys will go over them as well. And I'm happy, dude. I try to like find every way that every person trades, and I'm still educating myself, guys. Like, I didn't just say, "Oh, cool, I found a compression and crossover play. This is how I make money," and I stopped. Right? I know there's like another guru mentor guy. All he does is these what are they called? Wash out long whatever's. Bro, I just don't believe in that, dude. I will never stop educating myself and making myself better. I still join other people's rooms of people that I respect and know better, which I've done. And you guys see me working with market profile a lot more. That helps on the bigger time frames, bigger swings. That's where the bigger money is. So hopefully we got more to look forward to that in 2022. But I'm here for you guys. I'm still learning it, and I will give you. I feel like my job is to take all the fluff out of what everyone teaches and make it applicable to how to make you successful and how a beginner could apply it to their trading. So I will share things as I go. Okay. Um, and it's a my point in saying all that is like if you have a question on volume profile or um, pivot points or other different ways that we trade, that aren't necessarily like how we trade in our room, dude, don't be afraid to bring it up because I've looked at a lot. Ichimoku, freaking. I used to use a whole lot of fib numbers. So cool. All right, guys, I'm gonna go hang Christmas ornaments. They're waiting for me. Hope you guys have a great rest of your weekend, and we'll see you tomorrow. Okay. See you, brother.
Thanks, bro. Later.
All right, thanks. Bye.